Well, a warm welcome. I'm Joel Carty from Solace Financial, and this is our investment and economic update for April 2025. First off, we've got some important updates from the Australian Tax Office. If you're managing a self-managed super fund, remember to check your minimum pension payments. The ATO has reminded self-managed super funds that pension minimums must be paid by June 30, 2025. So make sure you stay on top of that if you haven't already scheduled to do it. Next, there's been a significant development in the Bendel case. This case revolves around whether unpaid present entitlements or amounts held in subtrust should be treated as financial accommodation under Division 7A of the Income Tax Assessment Act. This provision aims to prevent private use of company funds without proper tax treatment, especially for loans or distributions to shareholders or associates. The court decision is still pending approval, so we won't know the full impact on unpaid present entitlements and subtrusts until the proceeds play out. Stay tuned for further updates and how this may affect family trusts and related party arrangements under Division 7A. Now, some good news for those working from home. Starting from the 1st of July 2024, the ATO has updated the fixed rate method of claiming work-related home expenses. The rate will now be 70 cents per hour, up from the previous 67 cents per hour. This is in response to the rising costs for utilities and the internet. If you've been working from home or running a home-based business, make sure to take advantage of this adjustment when tax time comes around. One significant change to be aware of: as of the 1st of July 2025, ATO interest charges will no longer be deductible. If you've been deducting those charges in the past, it's something you'll need to adjust for. Be sure to consult your tax professional to understand how these changes may impact your financial situation. Shifting gears to the broader economic landscape, April 2025 has been quite a month. Here's a quick breakdown. In early April, the Trump administration made headlines with announcements of reciprocal tariffs labeled Liberation Day. This caused global equity markets to face significant volatility, the highest in 5 years. However, after tariff delays and trade talks, markets began to stabilise by mid-month. Closer to home, the Australian stock market performed better, with the S&P ASX All Ordinaries Index rebounding by 3.6% in April. The standout performers were in the commodities and information technology sectors, which showed strong growth. On the global stage, the MSCI World Index bounced back with a 0.9% increase after earlier losses. The US markets had mixed results. The S&P 500 fell by 0.7%, while the Nasdaq showed positive growth, up by 1.5%. The equity sector, however, faced major declines, down 13.7%, as oil prices fell sharply. Looking at commodities, gold continued to rise, climbing 5.9%, as investors sought safe havens. On the flip side, oil saw a sharp drop of 17.1%, driven by concerns over global growth. Base metals like copper and iron ore also faced declines, with iron ore down 5.4%. In bond markets, yields saw significant movement. The US 10-year Treasury yield closed at 4.16%, while the Australian 10-year bond dropped, reflecting shifting expectations around interest rates and inflation. In the Australian economy, core inflation measures showed moderation in April, with trimmed mean CPI coming in at 2.9%. This aligned with the Reserve Bank of Australia's forecast, and we could see a rate cut as early as May. Unemployment remains low, with steady employment growth, although there's been a slight dip in job advertisements recently. Consumer sentiment dropped by 6% in April, primarily due to global trade concerns about labour markets remaining strong, and the Australian economy is holding up well. To sum it up, April 2025 was a month of mixed signals. On the global stage, trade tensions and tariffs caused significant volatility, but we saw rebounds, especially in the tech sector. Here in Australia, the economy shows resilience, despite global uncertainties. Markets are bouncing back, but caution is still needed in this shifting landscape. Sector selection, particularly in technology and communications, will be the key to growth in the upcoming months. All right, that wraps up our economic and market update for April 2025. There's a lot to keep an eye on in the coming months, and I'll be sure to keep you updated with any major developments. Until next time, we'll be watching.